So now yes, for the benefit of those that have just joined in, we are just looking at exit strategies briefly. Um, and I've okay, let me just trying to get the chat to show up, show all windows. Okay, yeah, I can see you. There you go. Share that screen. So we're discussing exit strategies. So that was a question that Adrian raised. So what I was trying to say was that it's important to have a goal. First of all, how much are you intending to get out of the market for the day on a particular position that you've entered in? And when you enter into the market, don't have it at the back of your mind that single position that you entered in is going to give you your total goal for that day. Because number one, you don't know what is going to, if there's news in the market, that brings in an uncertainty, and the fact that the market, we know that the market is manipulated. The big boys control the market. There are stop hunts and all of those things in the market. So especially if you're counter trend trading, you have to be careful when you're doing that as well. So the trick is to ensure that you start out on your trade, you have your micros starting out the trade, you have your levels in place. Let's say your final place was supposed to be the 161.8. Maybe that was your final level using the FIB ratio. You can't expect the market sit on the markets and expect it to take you there. You have to either take profits partially. Consider all of the levels between your 0 or your 100 and your 161.8. There are levels in between. So those levels are either your take profit, your mini take profit zones, or the levels where you increase your positions, or the levels where you move your stop losses to. This exit strategy is to ensure that you have a goal. Most importantly, above all, have a goal. If it is for a particular position, you want to make sure if you're aiming to make £100, $100 per day, don't expect one position to give you $100 per day, because that means you're going to be entering with either 0.1 lot size, which means you're looking for 100 pips. But that's because that's too. Sometimes maybe too much for a particular position. The market may not move 100 pips, or you're looking to put in a standard lot size. That's over leveraging depending on the account. Well, depending on the account size that you use, and if you have a 100K account, that's okay. And because another thing is that you have to put your skill level into consideration as well. So when you have £100 or $100 goal, what you want to do is to break that $100 into several dollars. You could do it $20 per trade, and you expect to enter 5 positions, meaning 5 different trades or 5 different positions, if you will, depending on how you can manage it, which means that you can enter one position and it takes you to your $20 at a particular junction or at a particular level. Then you wait and see whether you can get a pullback so you can enter another position. But don't let your position stay in the market and expect it to give you $100 at once. Always protect it, because like as I always say, the market will move in one direction, except there's a key activity happening in the market, maybe news, or there's an influx of liquidity in the market, then it can do that, So, but it will move in stages. It can go 20, can go 50, it can go 60, it can go 10. So at every junction, every pullback, you either get out of the market or you move your stop loss in to protect your profit, or you start out with so that's just pretty much it. That's how you can manage the market. There's no one rule that this is what is going to be. It's going to happen. It's going to always happen like that. There's no one rule that's going to always happen like that. So you need to develop your own strategy that would work for you. I can tell you to always make sure you have to use Fibonacci to show you levels where you can, but that may not be your thing. You may use it and it doesn't work for you every time. So that's why you need to know how to use Fibonacci, you need to know how to use structure, you need to know how to use your support and your resistance as well. So you apply each and every one of these strategies to get in and get out of the markets. But then I would not say it enough. Have a goal in mind every day when you can enter the market. Don't just say, I want to make money. How much do you want to make today? If some people say I want to make daily, maybe my daily will be 50. Some days you may not make 50. Don't say because I didn't make 50 today, I'm not going to leave the market. The market may just give you 20. Stick 20 and go, because that's when you start forcing the market to give you what it doesn't have. And it's what is it going to do? It's going to take back what you've made already. So yeah, for me, for instance, if I had this position, maybe I started at this point, I got to this area, I can take profit here, because what is happening, I'm seeing a pullback on the H4. It may look like it's just one single move, but if you come down to the H1, that may be a good. Where is it now? Okay, yeah. Let me use the H1. Yeah, better those ones will tend to give me. So I may have entered the market at this point. You notice this area. So there's a reaction. This may be where I can get out of the market. I entered at this point, very sweet position. Some people might say, okay, I'm going to sit down, because even if V bottom is a double bottom, I know it's going to keep going up. But I may not do that, because I know how the market operates. So, sorry, my internet has just been crazy. Can you hear me now? I think it's my internet, so it's fine now. So hopefully it resumes on the other side. Okay. So can you see my screen? Not yet. Okay. Okay, let me set that up. Okay. So should be fine now. Okay. So now at this point, this is my first TP. I'm out of the market from this point. And I may not even get out at this point. This is where I get out of. I mean, from the market from this point, because already I'm beginning to see some reaction. And why am I also sure that there might be some reaction at this point? Because I'm looking left. As I'm doing that, I'm looking left as well. What's happening on the left and on the left hand side? Are there areas where market price did some funny thing? Are there places where it turned back? Are there places where it broke? All those kind of things. I have to put them into consideration. So if I see that, those levels are being approached, I'm gonna either secure the bag or move my stop loss close to that entry. Most times my stop loss will probably be somewhere around here. Just to protect a few of my dollars. So that's what happens. Then I would wait for it. I already have that level set up. When it breaks that level, see a little bit of pullback, I will jump in again. Either jump in again or increase my lot size, put in another position and take it to the next level. When it got here, we saw another reaction. But I wouldn't have known there will be a reaction here. But how do I know there is a reaction? I have to go. I probably will have created that level anyway. So I won't enter the market blindly. I probably will have created the level from the beginning to ensure that it's a valid level. I can see some things happening on that level. I can see market came here, tested it and dropped. So I would have created that as a level for myself. So So that's the reason why I'm going to either take profit at this level again, or move my stop loss even closer, and then increase my my positions. So the whole idea, I may decide to get out of the market at this point if my goal is almost met, because I don't know what might happen. It's probably already given me how many pips. Let me see from here. If I entered from here, that's a lot of pips already. It's probably already given me 100 pips. Let's say my goal was 120 or 150. I'm out of the market, or I make sure that I'm so sure this trade is going to keep going up. If I know that I'm very close to the top of a move, I will not even enter anymore. I'll move on to the next trade, because one thing can happen. It can turn back before it even gets to that area. So I don't want to give back what I've gotten from the market. So I move on to the next trade. The remaining part of the money I can make off from another trade. Yep. Or again, I could use Fibonacci to just keep seeing what's happening. I know that whenever it comes in, it's probably going to turn back at the 50 or 68, 61, or even it's like this turned at the 38. So probably will have jumped in on the next one. Then I've moved my position higher again to wherever I stopped. That will be my A now. This came, okay, this didn't come, it approached the 20, the 50. It didn't cross it, it didn't even get there before turning back. Then my next level, but if I kept using my Fibonacci, I wouldn't have won this trade, because what happened, if you notice, it didn't go after hitting the 50. I would have said, oh, fantastic place to enter the market. Probably would have jumped in. What happened? Fell. It went up quite all right, but what did you see? It dropped all the way back to the 100. It gave me one move. It gave me a second move. Third move was not promising. So that's another thing you could also want to put into consideration. If the market has turned twice for you, you've entered and you won it twice, it may not promise you that third move. So just get out and move to the next trade. Always look for a high probability trade. If it's not high probability, don't take it. Especially if you've traded and made some winnings, because what's going to happen, your psychology is going to be, emotions are going to be affected. Now, if you have like 10 pounds or $10 remaining to make up your goal, your emotions will be in play, will start coming into play. If you see that $10, you might say, let me make it 10 more extra, or extra $5 dollars, or probably do, because the market is probably really moving. You might even tell yourself, okay, I think I'll probably make 2 days worth of gold in one trade, and that's where it gets tricky, because it can turn, and then the whole thing just starts turning, and then you start losing. Like now, right now, you probably will have seen this. Yeah, nice head and shoulder, that form, then you jump in, and what happened? It went the other way. It didn't come down. So yeah. Once you've seen it, a move, first, you've won the first one, won the second one, my advice is just get out, just get out and move on to the next one. But like I said, have a goal. Goal always helps us. And once you've approached, you've gotten either close to your goal or you've gotten your goal, just leave the market gently, so you don't offend anybody. Okay, any question?
What if you see something sweet?
Sorry. Oh, okay. I know that. You see, okay. See what the challenge is right now. I know
that
is
what you preach.
I know that Chinelo is on the other side of the call, and then Adrian is on the other side of the call. So both of you are asking questions at the same time. Is it possible for Chinelo, you're able to move to Zoom as well?
I don't have it on my PC and my
phone. Oh, you don't
phone.
have Zoom?
Yeah. I have to download it. I didn't know I took it out.
Okay, it's fine. Chinelo was saying, what if you see something sweet in the market? That's always my my what's it called? What can I call that? My tagline. Except I see something sweet in the market. Yeah, by something sweet in the market, it has to be really, really sweet. Now, but let's say for instance, now what the trouble with that is this. If I had seen something like this, I might tell myself that this is really sweet. Why? Because it's forming a head and shoulder. Someone might say this is sweet, but this is not sweet enough. Why? Because it does not confirm. What is the rule for entering head and shoulder? Yes, we have a shoulder, quite all right. Can see this now. Somebody might see this and say this is a fantastic market. It's a head and shoulder. But the rule for head and shoulder is this. Yes, we have the head, we have the shoulder, we have the first shoulder, we have the second shoulder, forming quite all right. Yep. And we have the base. Yep. That is already there. Now, the rule says that you must see this happen. Wait for that, then see this happen. Then this is where you enter your trade. So this may not be a sweet trade after all until this happens. So you must always ensure that you, although let me not say that 100% of the time this will happen. Sometimes you might see it might just happen like this. It could just drop. Yeah, but most times the market always does some form of pullback on retest, on heads and shoulders on some of these patterns. So if you have that as your rule, you must always try to see if you can follow it at all times. That keeps you in check, keeps you from making premature decisions of jumping into the market before the market is ready. Some people like to see, because they already see this happen, they see this forming, they jump in on the hand, they jump in here. But what tends to happen is that the market may not even come down, then it just starts going back. Because sometimes market movers use this as a trap as well. Yeah, they use some of these patterns as traps as well. They see this happen, they know that some people want to jump in, and they probably, instead of it coming down, they start buying or something, and at the end of the day, you start seeing the market go south. But if you must take a head and shoulder trade, and after you've taken your trade and you see something like that, before you jump in, ensure that you have this confirmation. But then the trick with head and shoulder is this: your stop loss. Although I know that the safe stop loss, it's somewhere here, this high. Aggressive one is just here. It's head and shoulders are tricky sometimes, because you have to stay. Your stop loss is sometimes very large. Like if you entered a trade at this point, so it means this is what your stop loss would be. 68. And let's say you are only looking to take, let me see how many pips you're looking to take from here. I don't know if, okay, yeah, that's too long. Let me just take it from here, because that's where I would have taken my profit. So this would probably be your TP. You see, it's almost at the 161. So your TP is how many? Just 40. And your risk is 68. That's a lot. You're risking too much for that long move. If this was a scalp, if you were scalping, I would have understood the jump in and jump out. But this one is quite risky. So, but the safe one, the other, what's it called? The aggressive stop loss is here. The shoulders, so which is how many pips from here? Yeah, about 40 as well. So your risk to reward ratio will be 1-to-1. Not so bad. Yep. So, but ensure that you always get a confirmation for whatever we say sweet. Something sweet means that you have to get a confirmation. You can't risk it. You can't just jump in like, okay, I know it's going there. You need to see that confirmation before you take it. So, yep. Over to you, Adrian. You wanted to ask a question. Yep. Mm, mm. Get out. Now, the next day when you come back, you reanalyze the market. Yeah, you take the market from wherever it is. Now you've taken your goal for the. Oh, I almost closed this. Let me take this out of the way. You got in, you saw this coming down. Maybe probably you saw this. Maybe let's say your TP or somewhere here. Let's assume this is your TP for this trade. Your final. I still see this one coming down a little bit more. Yeah, let's assume this is your final TP. You jumped in, you probably entered the market at this point. It got here, started having a reaction. You got your goal at this point. This is the point you get out of the market at this point. You know that, although we all know that, you know, you've looked at the market, you know that the market is coming down here. But because of discipline, you want to follow your strategy. You don't want to leave anything to chance. You get out because the market is always there. It is always there. Even if it moves after you left, it moved another 10 to 20 or 50 pips. It's all good. There are trades everywhere, every day. So you let the market go. You know that by the time you come by, it probably will have moved. So all you're looking for in the market is either a consolidation or a pullback. Because when it drops, it's going to pull back. It's going to do a pullback, or it's going to consolidate before dropping again. But before you even enter, you know you're going to get a confirmation. So don't hold on. It's like holding on to something. If you don't need to hold on to it. There are some relationships you just need to let go. You know, so like this trades. Once you've gotten your goal, get out of the market. Don't leave except you want to forgo some part of your profit by moving your stop loss. Because when you move your stop loss, you're definitely not going to move your stop loss 100%. You're probably either going to move it halfway, 25%. So it means you're leaving, instead of you getting out with $50, you're probably risking to keep $40 in the market and just only have $10 in your pockets. Hopefully the market continues down. So yeah, because if I were me, I would get out with my $50 and come back to the market the next day and wait for a pullback or another kind of confirmation before I jump in again. Because like I say, the market is always there. Price will always happen. Even if you don't make it in that pair, you can make it in a different pair. I know you don't trade. You don't have a single pair right now. You've made me jump from pair to pair again. Thank you. So good. I was so diligent. I was doing well, but you threw in a bone. It's fine. It's all good. Yeah. So yeah, just let it go. Next time, come into the market the next day. It's still going to be there. Sometimes that particular position is just going to keep consolidating, and you know what consolidation is. The longer it stays in a consolidation, it's the higher the move, the longer the move as well. So it happens like that. So it means it creates more opportunity for you to win big. If it consolidates for a long time. Yeah. Yeah, it really helps. Really helps. Okay. So any question again? Just want to look at few. I don't know what pairs we're looking at right now. What is everyone looking at? Someone has a background noise.
Sorry, I'm watching GU and AU.
Sorry, what did you say?
GU and AU.
GU and AU.
Yeah, GU.
Okay, let me see. Let me look for another one. Where is it? Okay. GU. Where you at? Okay, so this is it. Of course, I know, to be honest, this is one of those pairs I don't want to trade again. I don't have anything to do with you. Besides, this one I have here is on my demo. So, yep, we can start normal way, same way we start. Start it the same way. Keep things on top. So we look at things from the higher time frame. As you can see, this trade, this looks like a very lovely trade. Looks like something that's going to drop hard if it's going to drop. On the weekly, that's what we see. Put this there and just down. Yeah, I'm gonna put this there. And this up just in case. Put this there. So we all know how we do. We just look at things from the higher time frame. We look for areas where prices had some break and retest, multiple touches, what have you. And we like to look at the line chart as well because it takes away the noise. So reaction here. I don't know if this does it. Yes, there's some reaction at the back as well. Yeah. Okay, hold on. Let me confirm that move. Okay, yeah. Okay. If it did this, if it dropped like this, there's a reaction somewhere in the past. So I have that, and I have this. Why do I have this? Because of this and that, and probably this as well. But again, you know how we roll. We don't really look at things from a line perspective. We look at things from a zone and a level area perspective, because this now may be in tandem with here, here, so here as well. We'll be considering it in relationship to here. So yeah, that's how it is. So I don't have to mark everywhere on the chart. Just look at the key levels. Yep. The job of charting is really interesting, especially if you see those levels, or if you know what you're looking for. It's really, really interesting. When we started, I never really knew how to read the charts. When I see Lindo do something like this, I'm like, what exactly is he doing? When will I ever learn to look at the charts and do this for myself? Yeah, but they kept advising, encouraging us. Well, just keep doing it. Just keep practicing. Whatever you see us do, try it when you get home, at your leisure time. Then it just comes to you. The most important thing is being able to see patterns in the market. You see patterns in the market, you can recognize them, you can recognize movement, you can see structures happen. It's a gift. So, and you all already have that gift. You can easily see structures in the market, see movements. You anticipate what price is going to do based on that. And that's a skill set that a whole lot of people pay thousands of pounds here in the UK to learn. A friend of mine that joined us, he said it was the day he joined us, he had gone to pay £500. They asked him to bring on £2,500. He'd already given a deposit of 500. He was just going in to pay the balance when I called him about IML. So he said when he learned I was in IML and I was trading, he felt there was nothing else he needed. He just needed someone that knew how to do the job. £2,000, and IML is just asking for how many dollars? So let's say we are fortunate. So it's just that I find it very sad when people come to the platform and all they want are signals. They just want signals. They don't want to struggle. They don't want to. I'm like, things, if you spend time with it, you find them easy. Okay, so let me see. How many moves is this? So where are we? This is where we're at. Now we know that this is doing this. There may be a reason for us to believe that this may still go up a bit. Because this is if it go up, this I will consider this a fake breakout. Fake out. Consider this a fake out. Might be a fake out. It may not go higher again. But even if it does, it's all good. We would only enter the market on confirmations. We would only enter the market when we get confirmations from the market. So right now, seeing this now, you can see that price is probably doing a pullback, hoping to jump up again. So you can even use your Fibonacci to, to box this in to see what's going to happen to it. And it may be, I can still move this down so as to, oh God, this is gonna go off soon. Hope it doesn't. Oh, hold on, please. Let me put this back. It's too far away. Let me put this back. The lines are too far away. I can control it. I think next year I'm gonna subscribe for Zoom, because Zoom is much more preferred to join me. It's just that join me is quite when I was teaching training project management, I used to use join me. That's why I'm so used to join me. Okay, so come on. So this is where we're at. So if everything continues the way it is, we're expecting this to jump up a bit, come up a bit before dropping. Because you know what it is. If when the market goes like this, it will always do some. It will always have some reaction before reversal, either a head and shoulder, or a double top, or a triple top. So those are the things. If you're looking to sell this long term, what you're really looking for is for double tops, and this could be an example of a double top or triple top, if you will. So you might see this come down from somewhere around here, or even this might be making its way down. But on that, before that, we know that it broke this, it retested, and instead of coming in and dropping, it went back inside and is retesting. So I would be more biased to is a buy on this side. Be more biased to a buyer to see it go back to this level before finally dropping. But again, I will not jump into the market until I see confirmation. So if for this one, if this happens, if this works out well, we're gonna keep this here. This is it's on the level and it coincides with the 23. It's all good, but I'll only wait to see a proper breakout of this consolidation that is happening, or pullback that is happening. So how would I trade this? I see that move. Yep. And I see that pullback happening, or whatever you want to call it, a flag, whatever you want to call it. So I see that happen. I know that is on that level. So one of the things I'm really, really looking for is for it to break. I think it's a better. Move my rectangle. So what I'm really waiting for is for this to break out of this blue zone. Yep, I know that it's breaking out of this line. It's all good, but I need to see it break out of that blue zone before I can confirm that, okay, I will take this to the upside. Yep, it turned. I can tell it. I tell myself it turned at the 23. It's in confluence with that zone that I find myself. I can also see if it's a psychological zone. And how do I know what's close here? 1.41. Let me see, 1.41280. Round numbers are round figures are psychological zone. So it's a psychological. That's a psychological zone. Let me see 500 if that works. 500 might really come down. $1.412. Let me see 900. Okay, yeah. So that's a psychological zone as well. And remember, I talked about confluence. So 1.41290 is a psychological zone, and it's a structure because of the fact that you see some breakout and retest, you see breakout on some reaction in that area as well. If you go back, you still see loads of reaction in that area, and it's a fib level as well. Where was I? Yeah, it's in the 23 fib level as well. So I'm biased to seeing it be bullish, but then again, I need to see it break out of this zone properly before I enter. And when I jump in, will not wait until it gets to maximum. I'm looking for how many pips from here. If I'm entering from here, yeah, immediately touch here, I'm out of the market, probably 87 pips or 85 pips. Yep, from here. If it peradventure breaks this zone, I need to wait also to see another pullback before I can jump in. And again, I would also wait once it gets close to this level. I'm out. I don't have to wait, even though I know it's going to give me 100 and probably to this level, it's going to give me 115. I may just come out at maybe even 100. So that's how I do it. So that's if the bullish is going to win this trade. But if it is not going to win, what are we looking for? We're looking for it to break out of this blue zone again and probably do some form of retest again to the downside. If you follow structure, you won't miss it a lot and miss moves in the market. So when it comes in, what am I looking for? The first place I'm looking to take profit is where you have some reaction, which is the whole of this place. I can't ignore it. This would be my first. Why? Because you see a whole lot of reaction here. If you look left, you see reactions. So once I see the market approaching this, it might just be 20 or 30 pips, but it's fine. It's the reaction. So I see that and I jump in. How many pips? Yeah, 28 pips. I have to acknowledge it. Either I move my stop loss in, or I just get out of the market and wait for what it's going to do. Now, I don't like this because the areas that is too choppy. You see, from there down here, just 60. The move is just so choppy. So, but there's nothing you can do. You need to you need to acknowledge every one of those levels as they appear. This should be 70, around the 70 plus 75 fib level. So when you leave there, wait for another pullback, a retest, then ride it down to that next level. So that's really what it is. But I'm more biased to the upside for GU now. More biased to the upside. But I wouldn't put this on my real account. I don't like the way it moves. Yep. Because even look at this. Okay, one would expect this to head and shoulder to finish for me. Let me see if this gave the final TP for that head and shoulder. So I assume this was it. Yep, it didn't give you the full head and shoulder. It turned before it got there, and then pretty much came down, but didn't get to your full TP. So that's GU. I'm more biased to the upside for GU, but bear in mind you only enter the market when you get that breakout, that confirmation on this side. Let it come out of this blue zone properly before you can. If you're already in the market, then if you're selling, you need to keep praying then that it plays out or it comes back down. But if you're buying, you're in business. So which other one are we looking at? UJ, that pair has been a pain in our head. let me look for another one. UJ was my pair, but I don't think I'm going to stick to it. Oh, someone is writing on my screen. I never used to have someone write on my screen. This is the first time. It's a good thing. Miss UJ, where are you now? Okay, all right, all right. Yeah, but the thing is this: when it kicks us out, I don't think we are able to use the same one. I don't think so. I have to create another one. It does that unless somebody has a solution. That's what I posted earlier to the offsite. Sorry, it was me. Oh, okay. Okay, that's what you posted earlier to the offsite. So, okay, you're seeing it as bullish as well. So, okay, that's second confirmation for us. That the good thing about this is that if we all see the same thing, oh, okay. Okay, so no problem. I'm gonna reset that. So it's out. The Zoom has logged us out off. So I'm gonna do it again. So just bear with me. For those of us in join me, just bear with me. I think you have a background noise.
Are you recording?
Yes, I am.
Brian, turn down the volume of that.
Yeah, yeah. It's better now. You can stay here. I can barely hear you.
Then it's not me.
Yo, I think when you open your mic, that's what happens. If you mute yourself, you see it to stop.
Can you hear me now?
Well, I can still hear the noise in the background, but I think you can speak now. Yeah, just speak.
Okay. When you were doing the dream, when you drew that triangle, I drew something like that, but mine looks more like a pendant.
Yeah, yeah, pennant. Yeah, you can remember what I said when I was teaching us these patterns, that I call everything flags, as long as they have that flag feel. Some of them are called descending triangles. Some are called pennants. Some are called flags. But I just classify everything as a flag. They're all really just a pullback. It just does a pullback. Some of them it does that rally, does a base, and then it drop. I showed us that some time back. So you see a rally. Okay, just mute yourself again, so because it's really echoing. So you see a rally, you see a base, then you see a rally. That's one side that move that makes. Another one is you see a rally, you see a base, and then you see a drop. So now, because it's forming a flag, doesn't mean that it's gonna always go up. There are rules that says that it can go up, then do a base and keep going up. The other rule says it can go up, do a base, and then do a drop. The same thing happens on the bearish one. You have a drop, a base, and a drop, or you have a drop, a base, and a rally. So yes, but it's really what it is. Could be a pennant, could be a flag, could be an ascending triangle, a descending triangle, what have you. But it's just forms. I classify all of them as flags. You get what I mean? Okay. Yeah, I can hear you. Okay. Okay, somebody said UJ. Okay, UJ, here you go. Now, UJ. To be honest, I really see UJ coming down. Because if you look at the dollar index, it's the same kind of movement that is happening to the dollar index. So I really see UJ on the downside as well, because it needs to, what it's probably trying to do now is to a retest. So we'll map out the areas structure. So let me pick the one that is very visible first of all. That's the one that I like. So I have that in place. Put that in. UJ should have been a very interesting piece of trade too, but then it's just been messing up. It's not sure what it wants to do. So that's where we are at the moment with UJ. This is where UJ is at. So what we're waiting for is for UJ to do this, to complete this, and then fall back. First of all, so this level, because that's where you can see some reaction happening. You know, you can see that based on this as well. You know, so that is in place. You can see that happening here. So you need to see that happen, and then of course, if it's going to come down, wait to see a drop there, a pullback, and then wait to see another drop back to this level. So if this guy plays out for us well, follows the dollar, or the dollar does what it's supposed to do, this should give us 327, 25 pips. If it keeps going, keep doing what it's supposed to do, this should give us another 370 pips. Yep, but that's doing it on the weekly. If you had the account for it and the patience for it, you could have traded this. You know, maybe just put your stop loss somewhere around here and then swing this. But that's going to take you, because it's on the weekly, so you're looking at several weeks before they all play out, because of course this one candle represents a week, so this might go into months before you see the full benefit of that swing. So we're going to bring it down to the daily first of all, so I can have my trend line drawn. So if I bring that trend line here, I think it's better I bring it to the 4 hour, because the trend lines may not touch. So let me bring it down and then reduce this. So this is where I am now. I have that happening. Okay, maybe I'll just take this one. I could have taken this, but I don't want to leave it to chance. Well, I could still take it. That would be. So if I decide to take this, then, let me take this one. Take this, I'm probably a part of this. Yeah, so it means I still have a little bit room for this to come back and test this, because it broke out of it. What you know the rule of with for trading channels and breakouts and what's it called now, trend lines. So you see a breakout, you wait, retest, and then you ride it to the top. So if this happens, so I'm same with what we saw on the higher time frame. We want to see this drop here. It's how many minutes ago did we draw this? It's already dropped a few pips. So we need to see that drop in and then come here. And then we can TP here. Let me see how many pips that has. Oh, wow. That's 100 and something pips. Now we're not seeing within me. My bias is not for this to continue as a buyer. You know, this is I want to see this dropping, you know. So you could enter and let this enter here and pick it up to that place. But then what I can advise is that you take your profit before you even get here, because not every trade why am I so particular, so sure that this might come down? Because if you look left, you could see what happened here. You see that move. And what did you see? You see a breakout. Yep. It came back and retested, and then what did it do? It dropped. So it wasn't able to really test it properly. If you look closer, you will notice that it didn't really touch that line. Yep. So probably this is that test that we're looking for. But whatever, even though it doesn't come in and test it properly, it's still coming back up. So we need to expect that to happen. Why are we expecting that? Because we had that, what's it called, lower high and lower lows, lower high, lower low. Then what happened? You saw the market break out of it. It broke structure. It broke that trend structure. And now you know what it is. When it breaks the structure, when it breaks the trend line, breaks the support and resistance line, you always wait for it to come back and retest it. And after retesting, that is your cue for you to enter that trade. So it broke the structure of lower lows and lower highs, lower lows and lower highs, lower lows and lower highs, and then came back and is trying to retest it. So some people could even say, okay, pick it up from here. And so, okay, I think this would be my cue for entering, but I just want to give it a little room. I'm in no rush to take this trade, so I'm just going to keep it here. So and let it be here, you know. So you may enter early, you know, but so it means if you enter early, you might need to just make your stop loss. There are levels here as well. There's a level, it's just that it's not so smooth. It's a level here. Let me use this as this line first. It's a level here as well. You can see it if you have your charts. Can see with me. It's a level here as well. So you may want to put your stop loss below that, or if you want to be very safe, can just stick it here. But that's lots of room for stop loss. Really depends on what you want to trade, really. So let it go. Can jump in at this point. Anyone that wants to trade this can jump in at this point, and then just you suffer a little pullback. If at all it comes back down, does it fake out? That's maybe about 20 pips. Might fake out a little bit, or you can just decide to make your stop loss down here, you know. But that's massive. That's 98. Let me see how much you'll be making if you do that. Okay, so not too bad. 1 to 1, almost 1 to 2. So it's not too bad if you have a 90 pip stop loss and you're going in to make 140 pips, almost 1 to 2. So that's not a bad trade to take, you know. I think I might even consider this trade, you know. So that's that one. But when that happens to the upside, what you're really looking for is the sell. That's my overall bias for this trade. I'm really looking forward to taking this trade. I don't see this breaking, but again, nobody owns the market. It's not my dad that owns it, my father that owns it. So I can't say for sure that this is where it's going to, you know. So if it decides to do what it wants to do, then it's going to break out, you know. But like this Bible says, we are not ignorant of the devices of the devil. The devil can decide to ruin it for everyone. So whenever that happens, we have a level, like, and if it goes up, I don't really like the way it is on the upside. Maybe somewhere around here. Well, maybe you could take your first TP here, you know, this level. You can take your first TP, then maybe your second will probably be somewhere around here, where you had that these multiple touches, you know. So that would be your level. Then the next one will probably be somewhere around here, you know. So if it goes up, I don't see it going up, but anything can happen. But be on the lookout, you know. Don't have whatever position you're entering in. You could start with this micro or a 0.1 lot size. Start with a 0.1 lot size, then you keep increasing it. So what we're waiting for is for this to break down, and then we're good to go. I'm going to take this trade. I'll take it in sessions. Yep. Any question? Oh, cool. So when it gets to the next level, you could increase your positions and win big as well. Okay. Which other trade am I looking at again? Anyone else? I'm really looking at that Euro USD card. That's my trade. I'm looking at that USD card. I know it still has room. Where are you now? So just that it's expensive to trade, but I don't mind. Sweet. So yep, this is a guy here. It's where we are with Euro USD card. You can clearly see it. It's so lovely. It's already dropped hard. It's already done some really good move. You know, see, it's a perfect head and shoulder. already dropped massively this today. So was it today or yesterday? It's already it's a new day at my end. So yeah, we saw that coming. I entered and I was a massive win for this one. Yep. So this is the neckline. I'm just gonna put some horizontal line. Yeah. So that's the neckline. Okay, so this is what we saw. In fact, I posted it in the peep and dip as well. So we saw that come. It did this before. Some people jumped out of it. In fact, I jumped out of it. I took profit and jumped out because I felt it was too. It almost got to my. I think it got to my stop loss. Did I take profit? I think I lost the trade because it got out and went back to hit my stop loss. Something. I think I brought my stop loss closer. Can't remember, but I didn't really win it, but I had a 0.01 lot size. Now, this is like this is where your stop loss should be if you wanted to take this trade, either this previous high. Now, the challenge with this one is just that the shoulder and this shoulder are not in alignment. So you may either put it here or here. Have three options now, or here. But you need to weigh the pros and the cons in terms of how much are you trying to get for that much stop loss. So my TP would be from here down to here, so which would be, all things remain equal, this is where we're going to. This is where I'm going to. So this is where my TP would be. So yeah, so we've already gone almost half of it. 136 pips from where we entered. So we still have how many more pips to go? 179, 75 pips to go. So let's see where it aligns with Ola. See, we aligns well with that structural level. So we are not from the truth. Can you see that? See, it's a very fantastic area. Now, what else can I look for now? Just confirmation. Let me see what's the psychological level is. So if I do this 74, what about 700? Yep. It's a psychological level as well. Yes. Okay, so if I wanted to look at it with a fib as well, same principle, nothing lost. Now, see right now, see where we are at. I've already, if I was coming from up, this would have been my A, B, then this would be my C. Now, this next one will be my A. It will be this next one, because that's the highest in that move. But the move has been made, and I've gotten my B, so I mean my D, so to speak. So this will be my next move. Where did it get to? Although it's still moving, I can't really say. Or I can say I could do this. Okay, hold on. That's my. If you look at this, this is what happened. Where did it turn at before we go to the next level now? Look at this. Look at this. That's why we say we can't make these things up. You see what happened? It turned at a good level, structural level, and which is coincides with a 38 fib level. So now I'm expecting, if I was using the other Fibonacci, I should be looking at taking my profit at the okay, if I do my measured trade from here down here to my 38. This is my measured trade. Where is it now? measured trade. This will be my TP. Okay, my TP. Come down a bit. Yep, almost there. Almost there. That will be my TP. And then that will be, this will be like my D. If it keeps going down, I'll just have to keep moving my Fibonacci. But if it turns at this point, if it starts having some reaction at this point, this will be my next, this will be my next 100. Then I'll drag this down to wherever it gets to. If this is where it gets to before moving, then this will be my next. Because what do you see it do? It's doing higher highs, lower lows, lower highs and lower lows. That's what you're seeing here. Yep. So the way you do your fib, always move it to the next level. Move it to the next level. Move it to the next level. You know. So is that how you did yours? Yes, pull it to where the pullback is happening. Because you don't know where the pullback is going to happen, where the pullback is going to stop. But just take it to where the price stopped and started moving back. Because that will be your B. This is our B now. Why? Because price came here, it stopped here and started having some reaction. So this automatically is our B. So our first move from here is going to stop here. It's going to stop exactly here. Our 0 is going to be at this point. And then we see it move. So wherever it stops and starts moving down will be our C. So here will be our C. This 38 will be our C. Then when we finish that, we take that move has finished happening. We move Fibonacci back to 100%, or our A will be our C. Our A will be our C. Our B will be where the D was. That's where the target or where it got to before doing a pullback. Then we'll now look for our C. C will be here. This is where we'll probably enter our next trade. We enter the next trade at this point. Because the thing is this, we don't know that it's going to turn at the 38. We don't know that it's going to turn at the 50. We just have some confirmations that would tell us it's time to turn. Like this probably was maybe you look at this candle as a doji. Okay, probably that was a good move. Or you could come down and see other candle formations that would give you a confirmation that move. Like now, is that not a shooting star they call it? I think that's a shooting star or whatever. I think it's a shooting star because it's pointed up. Or even the candle itself shows this sign of exhaustion, meaning that it's rejecting that level. That wick showing that it's rejecting that level. And after that wick, what did you see? A bearish engulfing candle. A large candle telling you that, okay, indeed, that was a move to take. And then you could have entered on that and then traded it down. So you could use that, or you could use your, what's it called again? You could use your flag, draw your trend line around it, or when the trend line is broken, So yeah, you could use anything. So when you get there, once you found that, when you find whatever method you use to find your C, once you've identified it, then your target would either be your measured move, measure it from the top to that place that where it turned, or look for your -27, which is always is what my mentor likes to use, -27 as the key first TP of that move on your Fibonacci. I know we did do addition of different levels on Fibonacci. Have you added your one? Have you created your different levels on the Fibonacci? -27, -141. Okay. What about Deidre? I don't know if she's done that. Or any other person. Have you all, guys, everyone done it?
I wanted to do yesterday, so I want to do it.
Okay. All right. So, okay, I know I have the video, but I shared it I can't remember when now. I shared it on there. So you guys have to just put that in and then because it contains some key levels as well, which would be very helpful as well, some key TP levels as well. So I'm going to reshare the video. I don't know where, I don't know which one it is. I think we've done like 2.
That was Friday.
Friday, okay, the Friday's video. All right, I'm going to reshare it. So now this one, what we're looking at for this particular, okay, let me remove this. This trade, we're looking for this trade to still come down. This hasn't hit a TP yet. We still have a little bit ride to make. Yep. So yeah, I'm gonna still write it down a bit. Again, remember what I said. Goal is the thing. Goal is the thing. You know, so wouldn't really wait for it to hit this final TP. Once we've gotten our goal, we're out. And again, the idea of you've gotten the first, is done that first pullback and you've entered. So, or I could see this as a first pullback, second pullback. So even if it does this third one, I wouldn't wait for it to get there finally, because remember the third moves are not always promising. You know, so I'm just going to just wait. If it comes down a bit, I'm out of the market. Then I move on to the next trade, unless I see that it continues, or I can do that or move my stop loss in, secure some form of profit and allow the market to roll. But yeah, I'm still in this trade. I'm waiting for this to give me another pullback so I can jump in. Okay, it's given a good pullback at this point. So this is, I'm gonna get in at this on this one when when it breaks out. So at the moment, this is where we're at. This is where we're at. So this is what I would do if I'm gonna enter this trade. I would do this. Yep. So I'm waiting for this to break. You know the rules. You have to wait for it to break out of this trend. Break out, it close below, and then I start trading. But we could do aggressive entry because we already know that, we already believe. Let me not say we already feel that this is going to come down, because you never know it's going to continuously come down, because although we see head and shoulder, doesn't mean that that head and shoulder is going to play out perfectly. It may turn before it finishes. So I could enter right at this point, you know, but then if I do enter, it means I'm going to put my stop loss somewhere around here. I'm going to put my stop loss in the safest place I can put it for now. You know, I can't, if I take it to where that's too high, so I can put it somewhere around here. For how many pips? Let me see. Well, that's 130. Let's see how many pips you're looking to win in the market. 140. 1-to-1, not so bad. At least, yeah, if you get 1-to-2, great. 1-to-1, not so bad as well. Yeah, but not try not to get risk to reward of 2-to-1. Too risk, you're risking to make 1. That's not very profitable, a very profitable move, except you're scalping, because if you're scalping, you tend to go for a higher stop loss, but then you're not staying in the market for too long anyway. You just jump in and jump out. So if I was to jump in on this trade, I would jump in at this point, then put my stop loss there and write it down. If I want to do it the proper way, wait for it to break out and close below, then I enter on this move, then I write it down. Then when it gets to this level, you could still see some more move to the downside, possibly, because you still see some levels here, still see some levels. You know, for as far as I'm concerned, this is a reversal happening right now, so it could still come down, even, you know, somewhere. Let me see, to monthly. Okay, it could still come down as low as this area. Now look at this, it's a giant shooting star. So if this happened, then maybe this correction is going to happen as well. Who knows? So, but then, yeah, it is indeed. So, but I can see this. I can be rest assured that this would happen eventually because of this giant jump. This one I know that would definitely happen, and then from there, how many pips are we looking at from where we are now if we were to stay in? Woohoo! 1080 pips move. Have a standard there. That's 10,000 plus. And then you go on vacation. Oh, I won't trade for like a month or two, you know. And we get those kind of trades every day, 10,000 day, where others are making it in a year, you're making it in a day, you know, you know. That would be the life. Anyway, it's gonna come. It's gonna come. But we're gonna look at this move. I see this Eurocat coming down a bit. Now, if you want to look at it on the big picture, you can see cup of cocoa forming here as well. So this means that it may come as far as this place and then start pushing up. We don't know. I like what I see here because that tells me that it might still push up, but then there's nothing for me to use to know that. Let me see if I can find any data. Okay, it's gonna go off in time anyway. The only data I have is just here, and maybe here as well. That's all I have. It's supposed to be able to move higher than that for cup of cocoa. It goes really, really high, but this is all I have for now. So watch for this to come down to this level, and then we can start looking for a buy as well. Or if that doesn't play out, it might just come in and make this correction, come back to this structure. But it's all good for those people that like to trade one pair. This may be a very good pair to just monitor and trade, and then milk everything out of it. Okay, guys. I believe we'll have some really good success this week because of, well, like I said earlier when we started, for those of us that just joined before I said it, we have a whole lot of speeches happening this week. So different people are giving their speech, and that means that we anticipate some really good moves in the markets. So let's just keep our money intact. Don't overtrade, don't lose money. Whatever you've made, just take it and then secure the bag, and then prepare yourself for the next trade. Have your goal. Once your goal is met, leave the trade. Even if you saw a head and shoulder that is giving you 200 pips, if you've gotten 50 out of it, leave the 50, come back the next day and take the remaining 50. Even if you don't get the whole 200 pips, it's all good. You have different opportunities in the market. It goes up, it will always come down again. All right, guys, thank you very much for your time. I would see you in the groups. Thank you so much, Adrian. Thank you, Didi. Thank you. Sorry, what did you say? Yeah. Thank you very much. Thank you guys for, you guys, your improvement or your, how can I put now, your progress is really, really, it makes me very proud, because I know that there's a whole lot of people. There are people that I started training when we started. There are a whole lot of people that dropped off along the line because they found it very difficult. Even guys that dropped off, they found this very difficult. They said they would rather stick to signals. But you guys have been able to make this your own. You've seen how important it is not to just depend on signals. How important it is to get into the chart and get your hands dirty. And your improvement is really, really encouraging to me as well. So I really must appreciate you. So thank you very much for your hard work as well. And God bless you. I'm really proud of everyone. Okay. Mm, mm. All right then. Thank you. Have a good night, everyone. Bye bye. Bye. Bye.